money in the bank was safe. We thought our house was safe, but none of that's true. And the moment you put your money and your savings in the bank, you don't own anything.
BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. In this video, let's discuss these topics and more.
The average person watching this has no chance of making the money. They'll make normal returns, not supernormal returns. So Microsoft is whatever it is, $2-3 trillion company. What could it be worth? Who knows? 10 trillion, 15 trillion, doesn't really matter, right? That's a 5x. What, for the most revolutionary technology the world has ever seen, you make 5 times your money? That's not, but somebody else in VC or earlier, in some way, shape or form, or the entrepreneur will make all of the money. And this is the thing I don't like about the system as it is. It's kind of rigged against the ordinary person. So we're going to have your jobs replaced, you're going to have this societal change, and yet they don't get a chance. So yes, invest in technology. Don't own any other stocks. Own technology. And you will capture some of this. You're investing in your own demise. At least you'll get some high quality returns. But otherwise, the only way I can come up with, again, and we keep referring to it, is crypto.
What is crypto?
Crypto is just a technology. You know, it's a lot of things to many people. It's just a database that's better than databases in the past. So right now, your database may be in your spreadsheet, and let's say you and I have a bet. You write it down there, and we get a third person to say, yeah, that was the bet they had, and this is what's happened. Okay. That is how databases, that's banks, that's pretty much everything we do in societies in this ledger system, it's called.
I've got a suitcase here, which is maybe a good way to kind of explain this. This is a bank. And inside the bank, which is, I guess, the middleman, you got money.
Yeah.
So could you explain it to me through the context of this, we'll call it the central bank, how the system currently works as it relates to transactions, the public ledger, etc.?
So, okay, in the old world, we both had our gold.
Yeah.
And we'd stick it in our safe or bury it in the ground. That gold was your gold. This was my gold, and I might try and fight you for it. That's what pirates did. Okay. And then we invent banks. And banks, we put it in there, and they give you a note to say, Stephen, you've got one of those coins. Raoul, you've got one of those coins.
Okay, so we've both got a note now saying that.
Yeah. And now we trust this bank to give us our coins when we want them, because they're our coins.
Mm-hmm.
Okay, that makes sense. Safe as a bank, as people would say. The issue is in this world of smoke and mirrors, what's known as fractional reserve banking, they have taken those coins and given them to somebody else.
They've given my coins to someone else?
Yeah, they've lent it for money. So now that coin is not in there. But they've been given the money, so usually when you're just, if everybody pulls all the money out, there's not enough money. It's called a bank run. We've seen those recently, but that's a classic thing. So it's not your money because you don't actually own your money. The moment you put it in the bank, what you've become is in fact a debtor to the bank, or a creditor to the bank. So you've lent them money and you get some legal redress that if you've got less than 100,000 euros, pounds, whatever the currency is, generally that's protected by the government, that if the bank goes bust, then you get your money back. But anything beyond that, you don't get anything.
But I've got a piece of paper.
Yeah, means shit. You don't own anything.
Bitcoin hit a peak of 76,000, $481 on Bitstamp, shortly after 3 p.m. Eastern Daylight Time Wednesday. By 7:30 p.m., the flagship cryptocurrency hovered at $75,297 per coin. Solana outperformed Ethereum in several key metrics. The token surpassed Ethereum in market share for decentralized exchanges, economic value, and liquidity inflows. Additionally, Sol demonstrated strong price performance, reaching over $180 on election day and flipping BNB. Dogecoin is set for a major rally, with veteran trader Peter Brandt forecasting new all-time highs as Elon Musk's influence and a channel breakout drive momentum. Hodler Investments and GCL Energy Investment have partnered to develop a distributed energy infrastructure project in Ethiopia to power next-generation data centers. Ricardo Sabani, Chief Product Officer at the Web3 gaming platform My Neighbor Alice, believes the hype surrounding Web3 gaming has cooled due to unfulfilled promises and unrealistic expectations.
Now, it's so big as a problem that so that was 2012 European crisis, exactly this. People didn't own their money. That person walked off with it, asked the bank for it, the bank didn't have it, nobody's got any money, where it's all gone. That was the same Ponzi scheme we talked about when you buy a house and use the cash flow to buy another house, right? If somebody takes away what's known as the collateral, suddenly it's all gone. But the issue was actually bigger because 2008 proved another thing, is that nobody owns anything. So the whole system itself is leveraged. So, for example, back in that time, the average US government bond, which is the safest thing in the world, was leveraged up to 30 times.
What does that mean?
That means 30 people thought that was theirs.
Oh, so I say that this is the bank in front of us, the suitcase, and it had one coin in it. When we put that one coin in, it created 30 more coins and gave out 30 pieces of paper.
Yeah.
So there was actually only one coin in the bank,
yeah,
but they made 30 pieces of paper.
And that's all well and good if the collateral, the thing that it's secured on,
the coin,
maintains value.
Okay.
Or isn't pulled by one person. If you were the lender and you're original lender and you get it out and something happens, then all of these 29 other people are like, I want my coin back. And they're like, it doesn't exist.
It doesn't exist. So we just created the coin.
Correct.
We just gave you a piece of paper, but there was no coin backing it.
Yeah, and the issue is, so that's one issue with the banking. The other issue is pretty much everything we do is created on this. It's called a ledger system. A ledger was invented in the Renaissance in the 1500s, 1400s, where what would happen is you have this on a accounts or balance sheet, you'd have these dual entry ledgers. And what it's basically saying is, I agree with you, and often we'd have a third party agreeing it.
Okay.
Issue is that's known as the Byzantine generals problem. It's actually a philosophical, mathematical problem that has been unsolvable until Bitcoin came along. And what it is we are generals in a war. You are way away from me. We can't communicate with each other, but I need to send somebody to tell you something. There is no way of making sure that that person tells you exactly what I've told them, and no way of you approving it. And that's what a three-party system does. I may go to a notary, but how do you know I haven't bribed the notary to lie? I see that all the time.
Mm.
We see it with accounting firms and audits. We see this in everything. There's always one of these trusted parties that is not trusted. The bank, classical trusted counterparty that suddenly may not be trusted. We saw it with Silicon Valley Bank recently in the US.
Mm-hmm.
So what blockchain did really cleverly was said, okay, well, the way of solving this is to get thousands, tens of thousands, hundreds of thousands, millions of people to confirm it.
Russia is reshaping global finance, pivoting from the dollar to local currencies as more nations rally for alternatives to U.S. dominance in global transactions. BRICS is expanding rapidly, strengthening ties as its growing membership boosts market capacity and cements its position as a major global economic force. The Kenyan government collected $77.5 million tax revenue from cryptocurrency traders in the last fiscal year. The crypto meme community introduced an innovative online casino, Solana's Casino. But this isn't just another addition to the crypto gambling world. It's a new paradigm where 100% of the casino's net profits are reinvested back into the Solana token project. Every dollar earned benefits Solana token holders directly, making it the first casino of its kind. Huddy Corp, a North American Bitcoin miner, has unveiled plans to enhance its application-specific integrated circuit fleet, aiming for a boost in self-mining efficiency and expanded hash rate capacity by early 2025. Ripple CEO Brad Garlinghouse offered a pointed roadmap for the early days of Donald Trump's administration, outlining immediate steps that could reshape digital asset regulation. Meme coins are the current rave in the crypto industry. However, question marks remain over their long-term viability. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.